Dividends are like a waterfall, seamlessly providing you with an endless flow of income into your portfolio, like a never-ending stream of beautiful wealth trickling down, which you can parlay into. What is going on, guys, and welcome to the video. My name is Brandon, and today we're going to be talking about everything that you need to know about dividends. Now, if you guys are interested in dividend investing, I would highly recommend you go check out this YouTube channel. It's PPC Ian's YouTube channel. I'll link it in the description below. He releases a ton of great content on dividend stocks. He's a dividend investor. He's very educated when it comes to this space. I watch him all the time. So definitely go check him out if that's something that interests you. But let's start this video off. Let's start with the basics. What is a dividend? Well, a dividend in technical terms is a portion of a company's profits returned to the shareholder. So let's bring it back to the basics, guys. I'm gonna try to keep things really simple here. Let's say you have a company that sells a product. Let's say they sell a bunch of shoes. Now, let's say that throughout the course of the year, they sell $10 billion worth of shoes, all right? That's their revenues, that's their top line, that's how much they sold. Now, after paying out expenses, they gotta pay their staff and whatnot, they're gonna be left with their net income. That's how much the company actually made. Now, of this income, the company really has two main options as to what they can do. Option number one is they can reinvest it back into the company, right? They can go, develop some more shoes, spend the money on marketing, whatever, just reinvest back in the company. That's what we would call retained earnings. Or the second option that they have is they can take a portion of that income and they can pay a dividend to the shareholders. So a dividend is essentially just a cash payment made by the company to the stockholders. It's basically just an incentive for holding the stock. And if you own a stock that pays a dividend, well, typically every quarter, so every 3 months, that's not always the case, but typically every quarter, you're gonna receive a little bit of cash, a little payment into your portfolio. And if you own multiple shares of the stock, well, you're gonna receive multiple dividends. And that's a really important thing to understand. Like if you had a stock, for example, that paid you a 20-cent dividend, you may be thinking to yourself like, man, what the hell am I gonna do with 20 cents? Like go buy a stick of gum or something? Come on. But let's assume, guys, that a month from now, we're gonna buy some additional shares. Then the month after that, we're gonna buy some more, and so on and so on. And over the course of 20, 30, 40 years, if we're buying, X amount of stock or X amount of shares every month, we can just think about how many shares we're gonna have built up over that long time frame, each of them paying us a dividend. Not to mention, guys, that typically these companies are gonna be increasing their dividends periodically. So a serious form of passive income. And we can just imagine how important it is to start building up a base now, because it's not till 30 to 40 years later that we're gonna start really benefiting from these dividends. The same shares that we're buying today, assuming we hold them for that long, these same shares are gonna be providing us with dividends years down the road. So super, super important, and you have to think about it with that long-term view. Now, two important points about dividends, guys. First things first, not all companies pay dividends. And typically you're gonna see the big blue chip, established stocks pay dividends. It's kind of a sign of, financially sound and stable companies. You'll often see companies with very consistent streams of revenue paying dividends. We think of, the utility sector, the financial sector, the consumer goods or consumer staples sector, all known to pay nice dividends because we think about it, man, who doesn't pay for their hydro bill? Who doesn't pay for toilet paper or their banking fees? These companies are receiving very consistent streams of revenue. In comparison to a lot of younger companies, tech companies are notorious for not paying dividends because we think about it, man, a lot of these tech companies, first of all, all the profits that they do make, if they're even profitable, a lot of these companies, when they're starting off, they're not even profitable to begin with. But even the profits that they do make, they're likely gonna
spit it out. Spit it out!
They're gonna wanna reinvest that back into the company and help the company grow. So it's strictly up to management whether they decide to pay a dividend or not. The second point here, guys, is that if a company does decide to pay a dividend, they have every right to reduce it or to straight up cancel it if they want. Sometimes you'll hear, a company decided to cut their dividend, or a company decided to slice their dividend or slash their dividend. And they tend to avoid this as much as possible. But at certain situations, it's in the company's best interest if they can't afford to be paying out a dividend. You'll often see this during, recessions, when companies are struggling. They'll say, hey, we can't afford to pay out this much capital. We're going to reduce our dividend. But for the most part, they are a very reliable source of income. But just make sure that you understand that it's not automatic, okay? Don't make that mistake because some investors do. Now, let's talk quickly, guys, about the dividend itself and then the dividend yield, because for some people, this can be a bit of a confusing topic. So when you look at a stock quote, you're often going to be seeing the dividend yield, and it's going to be stated in a percentage form. So the actual dividend amount is going to be stated in a dollar or a nominal value. Like, hey, this company pays a $1 dividend. But the dividend yield takes the dividend amount divided by the current share price. And we can look at a couple examples here to explain this. So if you have company A that pays a $1 dividend and it trades for $20 per share, that means it has a dividend yield of 5%. Now you have company B, which also pays a $1 dividend, but let's say that this stock trades for $100 per share. That means its dividend yield is only 1%. So with both of these companies, you're receiving $1 in dividends every year, but you had to invest much more in company B to get that $1. So the dividend yield is much more of an important number to look at. And just to clarify, guys, the dividends that you're receiving are going to be completely independent of the share price. There's two reasons why you invest in a stock, right? Capital gains if you're expecting the stock to grow or appreciate in value, and then income, right, from dividends. And ideally, you'd find a stock that gives you a bit of both. But technically speaking, you could buy a stock today for $100. A year from now, the stock could still be trading at $100. But if it paid like a 4% yield, well, you'd be up 4%. So dividends are such an important aspect of investing. And for someone to say something like, young investors don't need to invest in dividend stocks, right? They should only be investing in growth stocks. Come on, man. Having the core of your portfolio in dividend stocks, no matter how old you are, has so many benefits. We can think, for example, during a recession or during a market crash, if you have a good chunk of your portfolio invested in dividend stocks that are paying you 2, 3, 4%, that's a very consistent stream of income, and it's really going to help with stabilizing your portfolio. And the fact that these companies are paying dividends in the first place usually means that they're like I said, financially sound and healthy companies that are going to be able to withstand whatever recession they're in. They're probably going to bounce back relatively quickly. And don't get me wrong, I'm not trying to say, only invest in dividend stocks, man. Of course not. Growth stocks are a very important part of a portfolio. There are a ton of great growth stocks that don't pay dividends at all. I mean, we could name some like, Google and Amazon, Facebook, Berkshire. I mean, the list could go on forever. But what I'm saying is that as a younger investor, if you're trying to actually build, a true portfolio for your retirement and you're really trying to build wealth the right way, I'd highly suggest focusing on finding yourself, a handful or more than a handful, man, like a nice chunk of your portfolio in good, solid dividend paying stocks that year after year are going to be providing you with passive income. Having that consistent, for the most part, reliable source of income is definitely the way to do it, in my opinion. And then, of course, allocate a portion of your portfolio to invest in the growth stocks, to high flyers. That's just how I would personally do it. So guys, that is my overview on dividends. I think I touched on really the most important things that you need to know. I didn't touch on DRIPs, dividend reinvestment plans. Don't think you really need to know about that. If you're interested in that, maybe leave a comment. I can make a separate video on that. And I didn't talk about, what's the ideal range that you want to aim for when you're looking to invest in dividends, but I am planning on making a separate video just for that. So that's why I left that out. But if there's anything that I missed, man, be sure to leave them in the comments below. If you have any questions, leave them below. I'll be happy to answer them. And I really think that that'll give you a nice overview of dividends. Seriously, man, such an important aspect of investing, even for us young investors. And I really thank you guys for watching the video. If you enjoyed it, man, you can give it a thumbs up. And if you're not subscribed, subscribe to my channel. Post a video every week. And if you're already subscribed, man, thank you for watching. I'll see you guys in the next video.